What's up guys, DUX here. Welcome to this week recap, and today we're going to talk about some of the tickers that happened this week. Not much things going on. So before I get into the videos, I have a conference coming up in August 17th, 18th, and 19th. If you guys want to come watch me live trade, ask me some questions, and enjoy all the trader conference, I'll put a link below. Click the link and we'll take you straight to the registration page. We only have few spots left, so make sure to get your spot. Conference upcoming in 2 weeks. So here are the tickers I'm going to talk about. SMSI, which is today's gapper, so went from 3.4 to 4.8. It looks like a gap up short, but as I talked about before, when the stock is gapping up, especially when the stock market cap is over 100 million, these are very dangerous to short into and to go along with. Because when you want to go along in 100 million market cap, you need 100 million to inject into the current market cap to make the stock go up 100%. When the stock starts to drop, when they drop about 10 to 20%, you will lose about, let's say, 20 to 30 million in the market cap as well. And these tickers are not generally considered as penny stocks, because if the market cap is over 100 million over and the price is $5 or above, they don't really consider it as penny stock. They consider it as like a micro cap or mid cap. So these stocks are really hard to die. When we're shorting into bound short, gap up short, and all the starting market cap is around like 10 million, 20 million, 30 million, those are considered to be micro caps. So these type of stocks are extremely bad, especially in fundamental. So they have negative cash flows and they're trying to pump the stocks to put an offering out to take more money from the investors, and that's how they get their money. That's how they can support their company to keep going. For these type of bigger cap stocks, they don't really need to do offerings. If they have sufficient cash flow, then they are likely to come back, like something SMSI. So when people are trying to short into this type of gap up short and without any type of historical charts, volume was trading very low across the board since today. That's why shorting these type of tickers are not very ideal. Now, one of the other questions I get sometimes a lot is, well, if the stock is up like say 40%, 50%, or 60%, what's the minimum volume for me to trade? So when you look at tickers, something like OBLN, they just did a reverse split. Now first, when you look at a reverse split, is when the stock did like say 1 to 10, 1 to 20, they will reduce their flow, change the market cap. All the criteria becomes not as good before. Let's say $2 as resistance, there's about 60 million resistance and 60 million resistance, so 120 million resistance around $2. Once it does a reverse split, all the resistance changes and everything becomes not suitable for the current ticker. So you have to treat those tickers as completely different charts. Now, second thing is, after reverse split, well, you typically have to go back into SEC filing to find the current float. And when you look at the current day, and when stock is up about 40% and its total volume trading about 1.61 million, or minimum volume as is required by ticker is at least 4 million on intraday. So when you're shorting into this type of parabolic, even has resistance, if the volume is under 100k, it's not really tradable at all. So if you want to do like a low flow or a good news breakout, always be careful on the volume. When you're trading something with a really tiny volume, something like 1 per candle is 100k or less, or just barely over 100k, and when you're trying to buy the breakout, these type of breakouts are very likely to fake out because there's only limited amount of shares is being trading, and when you want to get out, you will affect the liquidity since there is very little shares being trading across the entire day. So when you want to use any type of pattern, let's say you are trading some type of strategies or trading, doesn't really matter if you're going long or short, always pay attention to the market cap. Market cap is the key to be able to apply any type of pattern into different tickers. Market cap is the first thing you want to look at. Typically for me, I don't really want to trade anything above 200 million market cap. If I see there's a huge resistance, 200 million, 300 million, and the market cap is over 200 million, then it's automatically filtered. So this ticker I don't really want to consider to short it anymore, no matter how heavy the resistance is. For your scanners, when you're trading all types of different strategies, try to find the perfect zone for yourself. Let's say you are very good with trading 500 million or above to $1 billion cap, and you find your correct strategy in there, and you found out, oh, you're already good trading $1 billion market cap or above, and all types of ranges. Because when you are trading these type of ranges, let's say 10 million or 20 million market cap compared with 100 million to 200 million market cap, those two different charts will perform completely different. Because, well, first the level 2 will be different, second the charts will be different, the stuffing will be different, the panic percentage will be different. So when you are trading and find the most comfortable zone that you want to trade, you will be most likely consistent profitable. I don't really believe you can really scalp in all types of market cap zone. Then you will be able to know all types of average pushing percentage, average panic percentage, average stuffing candle volume, because all these type of market cap zones are different. So what I recommend is, if you're gonna go long or short, first find the correct strategy, second find your perfect market cap zone, then go from there. Last reminder, if you want to register for the conference, I will put the link below. Hopefully you guys enjoyed this video, and if you guys want to come to the conference, I will see you guys there. Thank you very much, and you guys have a great day.